Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Chicago wheat. There are two, possibly three major features that have developed, or should I say are developing in this market. The first and by far the largest is the late May 2024 to date possible very large double bottom pattern. We're at this time constructing the second leg up in this pattern, and the key to the breakout upwards, I suspect, will be around the 50% Fibonacci line of the May to August 2024 move at 630, though it could be as high as the 50% Fibonacci line of the March to August 2024 move at 658. I'm sorry for being a bit vague here, but this is really a very large pattern. The second pattern is more recent, though still quite big. It is the early October to date rounded bottom pattern. Here I would also look to the 50% Fibonacci line at 630 as the final of the construction and start of the breakout. However, there is an argument for looking at the congestion in late October in the 583 to 592 area, just around where the gold long moving average is situated, currently at 588, as being the breakout point, though I am more cautious and would still favour the 630 area. However, just keep a wary eye out for the 588 area just in case. Finally, well, I have both the dark blue bullish Andrews pitchfork and also the bright red bullish shift pitchfork here for both the same August to early January move. Both of them on the same daily chart. I am usually loath to put both of these pitchforks on at the same time for any pattern, but for now both still fit, with the market being in between the dark blue middle time above, currently at 648, and the dark blue lower time below, currently 559, and also now playing with the bright red middle time, currently at 597. Both of these in their own way are supporting the move higher. So what have we in the way above that might change this seemingly significant attempt upwards? Well, not a lot. Personally, I think you would likely have to utilize the 250% Fibonacci lines above at 630 and 658 to try and do that, but topside does seem vulnerable right now. Chicago corn. The green short medium moving average below, currently at 465, had between September and December 2024 shown a significant support to this market, halting decline and starting a rally that is still evident today. And that's 13 weeks ago I asked the following question, I quote, "The key question would be whether prices can attain the early October highs between 450 to 455, or will the erosion of the bullish incentive by, for example, the long moving average or the November 2020 high at 439, whether this will be enough to prevent prices from trading higher," end of quote. Well, the 450 to 455 area topside did cap the topside, but by late December last year, prices, with the aid of the late September to late December 2024 sideways triangle and a new dark blue early December based uptrend, had pushed, an uptrend is currently at let's say 489, had pushed higher through the highs of May 2024 at 480 and 484 and up to the congestion band at 491 to 498. This started to erode the bullish incentive, but prices still pushed higher, testing this band of congestion between 505 to 506, made up from the 50% Fibonacci line of the June to August 2024 move, at the 50% Fibonacci, where we have seen further hesitation. We can expect to see further hesitation, though the topside has seemingly limited resistances. The one that it does have, and there are two significant ones, are likely to cause some second thoughts. You see, not far overhead we have the combination of the October 2021 low and the 50% Fibonacci line of the June 2013 to February 24 move, both at 516. Then a little higher still, and we have another significant combination, the 2014 high and the 61.8% absolute Fibonacci line at 525. These will be the levels to watch out for, topside. Then we come to this week's actions, and we are set up right now for a weekly key reversal this week. Thus, if we close tonight either over 497 or under 493, then we'll be on. Anything in between will have a lesser outside week pattern. Right now, we're looking at a weekly key reversal up for this week. These all detail the top side, so let's look at the downside now. And the most obvious and significant feature is the early December 2024 to date dark blue uptrend, say currently at 489. This is a multi-pointer uptrend and has been justified most recently this past Monday. If this breaks, and so far it still looks good, if this breaks, then we may see a significant move lower. Right now, possibly as far as the initial move down from that break to the 460 to 465 zone. So please be wary and aware of this. Kansas City week. Much like Chicago week, this market had been the story of two, possibly three major features that have been developed, or should I say are developing in this market. The first and by far the largest is the May 2024 to date possible very large double bottom pattern. We're at this time constructing the second up leg in this pattern, and the key to the breakout upwards, I suspect, will be around the January 2015 high at 646. This really is a very large pattern. The second pattern is the more recent, though still quite big. It is the early October 24 to date rounded bottom pattern. Here, I would also look to the January 2015 high at 646 as the final point of construction and the start of the breakout. However, there is an argument for looking at the congestion in late October to early November last year, based around where the flatlining gold long moving average is currently situated, which is currently 596, as being the breakout point. Although I am more cautious and I would still favour the 646 area. However, just keep a wary eye out for the 596 area just in case. Finally, unlike Chicago week, we only have the one bullish pitchfork here, a dark blue bullish shift pitchfork for the late August to early December 2024 move, quite a shallow one, and that's to look at. What is interesting is how late last week, and especially this week, the market has pierced, then stabilised, and is now using the dark blue middle time, currently at 595, as a base for the move higher, along with the new bright red January based uptrend, currently at 601. So what have we in a way above that might change this seemingly significant attempt higher? Well, not a lot. However, we are currently testing a really old 38.2% Fibonacci line of the 2011 to 2019 move at 618. And that's currently at 818 or thereabouts. And that's before we actually tried the January 2015 high itself. So just keep an eye on that one. Overall, the top side does seem vulnerable right now. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.